welcome back to the show. The markets may be flat, but we are not done with opinion just yet. Our colleague Nigel D'Souza has gone all the way to the dealing rooms in Anand Rathi, and he is in conversation with Amit Rathi. So Nigel, take it away.
Well, thanks so much, Sonia. I think the markets as well have pulled back from the low point of the day, so things at least appearing quite stable even here in the dealing room. But we have Amit with us. Amit, we've seen a good bounce after a long while. We're at least on Friday, and we're looking at a gain of around 2.5% for the week. What's your sense of the flows? Are we seeing some flows, incremental flows, or was it just the shots were covering out? Because last Friday around, we were below that 6,900 mark.
I think what we're probably seeing is more shorts getting covered. Yeah. I think general sentiment is still fairly negative, and if you see over the last 6-8 months, it's been the domestic flows that have been supporting the market, which also seem to have slowed. But I think, once you see more stability on the global side, I think some clarity in the budget on the banking sector in terms of the government's recapitalization plan, domestic flows will start to come in. I think our bigger call there is also driven by what's happening with real estate. Because if you look at local investors, that was one asset class where you saw significant flows going in the last 5-6 years. And I think that's starting to turn because clearly that's markets in a significant bear market. And I think for investors, the choice is really, can I beat debt at 8%?
All right. Amit, you mentioned a couple of sectors. Banking space, PSU banking stocks, everyone's asking where exactly is the bottom there. You mentioned real estate as well. Where's the bottom there? So let me give you 3 picks. We have real estate, we have metals, and we have PSU banking space. All of them, valuation-wise, fairly decent. Would you nibble into any one of them?
I think if at all it would be the PSU banking space, because I think, the NPA problem, there's a lot of uncertainty there, and if you go back and see what happened in the US, once the asset quality review takes place, a lot of the uncertainty is behind us, and then you will start seeing bank-specific stocks starting to probably do well. Real estate, our personal house view is that we're looking at one of the longest bear markets in few generations coming through in real estate, supply, affordability, major issues, and I think even the cash economy is starting to get constricted with what the government is trying to, get after the black money. Metals, I think again we're looking at a, sort of a bear market situation. You could see trading pullbacks, but that's a trading call and, something which is very difficult for us to call.
All right, then the next 10 days we have the budget session that's going to take place. Expectations very, very low in my, in fact, 5, 6, 8 years that I've been tracking the market. The expectations are the lowest levels. Can it be a blessing in hindsight? And also, what's that recap number you're looking forward to for the banks?
I think, like you said, expectations are very, very low, and I think it's also got to do with the sentiment generally in the market. So the chances of negative surprises are low. I think what we're looking at, people are focused on the fiscal deficit number. To us, it's more about the quality of the fiscal deficit. Where is the spending going? Is it supporting infrastructure spending and filling up the investment gap that the private sector's sort of missing from the private sector spending? In terms of PSU recap, I think people, the government simply doesn't have enough money. I think what people are looking at is saying, is the government serious? Is there a credible plan? Probably, going out, what are the investors they're going after? Are they, starting to create a bank holding structure, going to sovereign funds? Because the amount of money that's needed is significant. I think what the market wants to see is there a credible plan and not just talk? I think if we see something that's credible and steps towards that over the next, 12 to 18 months, if there's a serious plan, I think markets will like that.
Amit, all of us, the research team at CNBC TV 18, every conference we go for, everyone's searching for those mid-caps. Now, you all as a house have been pushing a lot of mid-caps. A lot of them, in fact, they have corrected close to 20-25% approximately from there. What's your outlook on mid-cap space? I was looking at a few stocks, something like a Granules, maybe a Bajaj Electric, DFM Foods, all of them, there are various mid-cap stocks that have been bobbing around. What's your sense? Is the mid-cap rally over, or do you think, in fact, the party is going to be restarted in a couple of months after we get out of this painful session?
So I think, of course, mid-caps are far more attractive in our view, but mid-caps cannot perform in isolation of the broader market. So the broader market needs to stabilize, after which you will start seeing sort of bottom-up stock picking in mid-caps. And the reason mid-caps are looking attractive is, I think, one, they're less geared to the global cycle compared to the large caps. B, I think they're bigger, they're sort of, you can get more focused on urban consumption plays. Whereas for the large caps, on the consumption side, a lot of them are very highly geared to the rural consumption side, which has been struggling because of the 2 bad monsoons that we've had. So I think in mid caps, you will find opportunities across both consumption and urban infrastructure as well.
All right. And also, we're looking at the defensive stocks. In the last 10 years, they've given you good numbers. We have IT as well as pharma stocks. Currently, they're trading at pretty low valuations. I think IT stocks trading at around 12 to around 16 times, fairly low. Would you be nibbling into these defensive stocks? Because at times you've seen that the markets fall and even these defensive stocks have been falling. So is it a good time to get into some of these defensive stocks? Maybe they won't be wonders like how they've done in the last few years, but still it's quite steady returns. What's your take on that?
I think very attractive. As you put it, I think these are stocks that, you know, over the 3 to 5 year period, for you to get 15% to 20% annualized returns, very, very possible. And I think given the risk profile, those are risk adjusted, those are fantastic numbers. I think valuations have really created a great buying opportunity for investors, because, you know, just I think a year and a half back, a lot of these stocks were trading at expensive valuations. So they've come off quite a bit, and I think it's a great entry point for investors.
All right, one final question, Amit, from me. Historically, the Nifty has traded at around 11.5 to around 16.5, 17 times. We're currently trading roughly around 14 to around 14.5 times. What exactly is a fair value on the Nifty? And also give us some targets. Where is the bottom? What's the year-end target for the Nifty?
Okay, so I think the Nifty is an animal that's not really well understood when people talk about PE multiples in general. One really needs to look at the constitution of the Nifty and where the profits are coming from. So if you go back, let's say, to the previous peak of the bull market, 2008, you saw that 60-70% earnings were coming from global cyclicals and generally cyclical industries. Today, the numbers flipped. 60-70% earnings are coming from IT, pharma, consumer, private sector banks, which are far more defensive in nature and sort of more predictable, and only 30% from global cyclicals. Now, clearly, this set of earnings deserves, in our view, a higher multiple than what the 2008 multiple was. So I think valuations are very, very attractive. Difficult to put a target on where numbers are. I think given what, you know, the kind of sell-off we've seen, our sense is we're close to the bottom, if not at the bottom. I think over the next 1 year, we could look at a 10 to 15% upside, because markets will take a while to recover from what's happened. Very, very, very likely.
All right. Thanks so much, Amit, for joining in. Sonia, that's the outlook coming in here from Amit. And 8,000 maybe on the Nifty, 10 to 15% uptake from these levels. Let's wait and watch. Back to you.
Okay, Nigel, thanks for that. And we look forward to seeing you back here in the studio soon. Thanks, Amit, for joining us.